Hey everyone, what are some of the key ratios from your P&L and balance sheet which tell you that your business is doing fine? First of all, it'd be great to have a group of other electrical contractors or via your industry association, whether that's NECA or Master Electricians Australia. Figure out if there is a way to be able to benchmark how you're going versus how the industry is going. And it's a valid question to ask your industry association. But the key ratios would be a gross profit over sales and your net profit over sales. Now, even if you don't find the ability to compare that with other electrical contractors in the same space that you are, by just comparing that ratio over the years, you'll be able to find out if your sales relative to your expenses is nudging ahead such that that ratio increases, or if your expenses are being managed better for the same sales or better such that that ratio increases. So it probably is a great way to figure out that with things happening such as qualified electricians costing a lot more, are you able to translate that into the sales that allow your ratio to remain the same, or is that ratio falling? Obviously, if that is falling, that tells you that you've got to be able to go out there and negotiate better terms with your customers, because otherwise you're going downhill, as you could see. The other ratios that you could look at is a debt to equity. So effectively, get someone in to value your business. It might be worth the $750,000 to be able to value your business, and then be able to do that every 2 or 3 years to find out if the value of your business is going up, is stagnant, or is going downwards. Once you've been able to establish that equity that you've got in your business, compare that to the debt that you've got as a business, either in terms of short, medium, long-term loans, and see whether it's within about a 20, 25, 30% mark. If your debt is starting to creep up relative to your equity, again, that's going to be an issue. And a third ratio that would be very useful is your staff retention ratio. So the number of staff in terms of how long they've stayed and the number of staff that are leaving. These are good avenues for you to realize, is there something happening within the culture that's causing people to leave quicker? Or is there something happening in the marketplace with which you would need to react as a business owner, through which people are leaving earlier than normal? But if you are able to do some of those ratios, it'll give you a good sense of whether your business is running well or is a marginal business.